So today we have our CPE seminar on NGO and NPO audit, and we have our two distinguished speakers, CA Ramachandran sir and CA SUTHESH sir with us. So I request both of them to occupy the chairs. So I also request all the members to stand up for our ICAI motto song. So after that we will be begin the program.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्द्वैत 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 एतद्द्वैत.
Thank you. So we have our first session by CA Ramachandran sir on application of income for NPO. Before that, I'd like to welcome sir on behalf of SIRC to the seminar, and to have a short brief of CA Ramachandran sir. He is a qualified chartered accountant in 1987 and established his own practice. Over the decades, sir has built an inspiring career marked by professionalism, academic excellence, and service. He has addressed numerous national and international conferences as well. And he is also expert in sharing his expertise on taxation and audit. He also serves as a professor of practice in a reputed deemed university, contributing immensely to academic and professional development. Adding to his many achievements, sir also acclaimed author of two scholarly works, Evolution of Amendments to Provision of Income Tax Relating to Trust and Institutions, and Evolution of Amendments to Income Tax Provisions for NPO, a comparative analysis of ITA and ITB. His first book, released in August 2020, was well appreciated across professional fraternity. It is indeed privileged to have him honored us today. And we have our second section by CA SUTHESH sir on NGO audit. And to have a short summary of CA SUTHESH sir, he is a seasoned chartered accountant and faculty member for his expertise in direct taxation, trust law, and compliance management. He has been actively involved in guiding professionals and institutions on practical aspects of taxation, charitable trust regulations, and related legal frameworks. His professional experience span across advisory, registration, representation, and training, and making his sessions both insightful and highly relevant to practitioners. CA SUTHESH sir is a well-respected CPE resource person for our previous programs also. Sir, on behalf of SIRC, I welcome you to the today program, sir. As a token of our appreciation, I request CA SUTHESH sir to kindly give the memento to our speakers as a token of gratitude, sir. Yes, sir. Oh, CA SUTHESH sir. Sorry, sir. A round of applause, please. Thank you, sir. I now invite CA Ramachandran sir to take over this session. Thank you, sir. Namaste and good evening. I request all the members to occupy the front rows. So, request all of back kindly occupy the front rows, please. So we can begin the program. So today we have our CPE seminar on NGO and NPO audit, and we have our two distinguished speakers, CA Ramachandran sir and CA SUTHESH sir with us. So I request both of them to occupy the chairs. So I also request all the members to stand up for our ICAI motto song. So after that, we will be beginning the program.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामर्षो पुरुषो निर्मिमाणः निर्मिमाणः अदेव शूद्रम् अदेव शूद्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः अस्मिन् श्रितः सर्वे तदूनात्यधिकश्चनान्यधिकश्च एतद्द्वैता 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 एतद्द्वैता
Thank you. So we have our first session by CA Ramachandran sir on application of income for NPO. Before that, I like to welcome sir on behalf of SIRC to the seminar, and to have a short brief of CA Ramachandran sir. He is a qualified chartered accountant in 1987 and established his own practice. Over the decades, sir has built an inspiring career marked by professionalism, academic excellence, and service. He has addressed numerous national and international conferences as well. And he is also is expert in sharing his expertise on taxation and audit. He also serves as a professor of practice in a reputed deemed university, contributing immensely to academic and professional development. Adding to his many achievements, Sir also acclaimed author of two scholarly works, Evolution of Amendments to Provision of Income Tax Relating to Trust and Institutions, and Evolution of Amendments to Income Tax Provisions for NPO, a comparative analysis of ITA and ITB. His first book, released in August 2021, was well appreciated across professional fraternity. It is indeed privileged to have him honored us today. And we have our second section by CA SUTHESH sir on NGO audit. And to have a short summary of CA SUTHESH sir, he is a seasoned chartered accountant and faculty member for his expertise in direct taxation, trust law, and compliance management. He has been actively involved in guiding professionals and institutions on practical aspects of taxation, charitable trust regulations, and related legal frameworks. His professional experience span across advisory, registration, representation, and training, and making his sessions both insightful and highly relevant to practitioners. C.A. SUTHESH sir is a well-respected CPE resource person for our previous programs also. Sir, on behalf of SIRC, I welcome you to the today program, sir. As a token of our appreciation, I request C.A. SUTHESH sir to kindly give the memento to our speakers as a token of gratitude, sir. Yes, sir. Oh, C.A. Satish sir. Sorry, sir. A round of applause, please. Thank you, sir. I now invite CA Ramachandran sir to take over this session. Thank you, sir.
Chairperson C.A. Revati Raghunathan, who could not come here, she is busy with her office work. Fellow professionals, my dear students, good evening to all of you. I thank SIRC Chairperson for giving me this opportunity to interact with you on the subject application, exemption and taxation of NPOs. Standing before you doesn't mean that I know the subject better than you. I know that I am here to learn the subject along with you. After my presentation over, let us have the question and answer session, if possible, before CA SUTHESH begins his presentation. I am also thankful to the kind words spoken about me in the guise of introduction. Before we discuss on the main topic, let us broadly dwell upon what are all the three types of NPOs, authorities involved, various acts governing the NPO, types of NPOs based on their activity, 1023C, definition of charitable purpose. Three types of NPOs are charitable trust, registered society, Section 8 company. Authorities involved are Registrar of Society, Registrar of Companies, Niti Aayog for the Home Affairs for Foreign Contribution Registration, Charity Commissioner, CSR and GST. Various acts, Companies Act, Society Registration Act, Indian Trust Act are the acts involved. Types of NPOs, charitable as per Section 215, charitable educational institution, medical institution, religious trust not defined in the Act, religious cum charitable. Various provisions which are related to taxation of trust and institutions are 215 definition, 224 1A, 2A voluntary contributions includes income. Number 10 income not included in total income. 1023C exemption for charitable trust, certain trusts. 11 exemption for income from property held under trust only for charitable or religious purpose. 12A income from trusts or institutions and conditions for exemption under section 11 and 12. 12AB procedure for registration. Number 13 circumstances for forfeiture of exemption. 35(1) exponent scientific 115D the taxation. 1023C, 3AB, 3AC, 3AD, 3AE. They continue to remain in statute. Even in New Income Tax Act 2025, it has found a place, but not as a separate section. So whenever they want to omit these provisions, they can omit without amending the Income Tax Act. That is 1023C, education medical institute, not registration not required. Wherever registration are required, 1023C 4, 5, 6 and 6A. Now 1023C has been merged and gone to 11 to 13. 1023C 4, 5, 6, 6A are omitted by Finance Number 2 Act of 2024 and merged at 11 and 12. It is long expected. Since 1998, where all the exemption benefits granted to such institutions have been withdrawn, these entities were parallel to the trust registered under section 11 and 12. There were no, at that time, till 1998, there were no restriction on accumulation, application, and investments as approved as specified under section 11(5). 1023C 3AB, existing solely for educational purpose, not for purpose of profit, only or substantially financed by government. Education institution 1023C 3AD, solely for educational not for profit, aggregate annual receipt does not exceed 5 crores. 1023 3AC, not existing solely for philanthropic purpose, that is for medical treatment and illness, and not for purpose of profit, only or substantially financed by government. Hospital institutional treatment 1023 3AE, existing solely for philanthropic purpose, that is medical treatment, not for purpose of profit, aggregate annual receipt does not exceed 5 crores. What is substantially financed? More than 50% of the gross receipts are funded by the government. What is charitable purpose? Relief of the poor, education, yoga, medical relief, conservation of preservation of environment, conservation of forest, preservation of monuments, advancement in other object of general public utility. Publication of school textbook at subsidy rate is also considered as a education. Charitable purpose includes sports activity as per CBD circular dated 24/19/84. Relief of the poor encompasses wide range of activities which assist poor and needy, underprivileged women and downtrodden. General public utility. Object of general public utility shall not be charitable purpose if it involves carrying on any activity in the nature of trade, commerce, or business for a fee, cess, and consideration, unless such activity is undertaken in the normal course of carrying on such activity, and aggregate of such receipt does not exceed 20% of total receipts. The recent Supreme Court judgment in the year 2023, New Noble Educational Society and Ahmedabad Urban Development Authority, which has really laid down various principles. Honorable High Court, Supreme Court has held that an education institution cannot carry on any charitable activity if it is established solely for educational activity. It has an extremely restricted window for profit making. And under Ahmedabad ADA, charging of fees significantly above cost will be treated as business. This judgment is confined to institution carrying on GPU as far as business activity is concerned. Whether the judgment is applicable to trusts which are carrying on first 6 limbs of the activity as defined under Section 215 is not clear according to me. Fee consideration charge should be minimal above cost. Profit is possible but not profiteering. The checklist for applicability of 215, whether activity falls within the last limb GPU and it is within the object of the trust. If it, yes, whether it involves activity in nature of trade, commerce, or business, or rendering service. If yes, whether it is undertaken in normal course of carrying out objects of the trust. If yes, whether charges significantly markup over the cost. If yes, whether quantum of business exceed 20% of total receipts. Wherever, if it is not carrying on undertaken not in the course of normal within the objects, then it is 215 specified violation under Section 12A(b)(4). Limbs of Section 215. What are all the relief of the poor? As I said, there is no definition for relief of the poor. Anything any relief given to the public which who are downtrodden and underprivileged falls under, including women, destitute people, and other things. Advanced GPU, there are various things which I will skip. Conditions for exemption under Section 11. Registration under Section 12A(1)(ac). Maintenance of books under 12A(1)(b)(1). Audit of accounts under 12A(1)(b)(2). The organization has to file ITR under 12A(1)(ba). Application of income under Section 11(1)(a) within India. Books of accounts. These are all various books of accounts which has to maintain under Rule 17AA. Our friend Mr. SUTHESH is going to take in detail about the next things, which I will skip. Section 11, what are the various sections? 11(1)A, 11(1)B, 11(1)C, 11(1)D, 11(1)A, 11(1) capital A, 11(1)B, capital B. All these things which I will be covering in the next few slides. Computation of income. Income is not computed on commercial basis. Income is computed as per books of accounts, not as per source of income or hedge of income. Application of income is on actual payment basis. Capital expenditure allowed as application. Administration expenditure is also allowed as an application. Depreciation is not allowed under Section 11(6) since cost of acquisition is allowed as an application in the year of acquisition. This normal computation, gross receipts less 15% accumulated under Section 11(1)(a), application of income, revenue expenditure, And what are our main disallowances under 40IA and 40A3 or so many other disallowances? Less accumulated under section 11.1 explanation 1.2 to previous year. What if you have accumulated, that has to be deducted. Then capital expenditure less accumulated under section 11.2. If you have accumulated in the earlier years, then what? Excess or shortfall you arrive at. If shortfall accumulate under section 11.1 explanation 1.2, file form 9A. Or if you are accumulating under 11.2 for more than 1 year, then you file form 10. If excess, no carry forward of losses. The excess is either utilized from previous year accumulation, what you have accumulated under 11.1A for various years, that is 15%, or corpus or loan funds. Again, points for discussion, which we'll be discussing in the next few slides. Application of income. Series of amendments since 2020 to 2023 have added more complexity to provisions relating to application. Income chargeable to tax shall be computed after deduction for expenditure incurred in India to the objects of the trust, subject to such expenditures not from corpus, not from loan or borrowing. Further amount is inadmissible under 40IA, 40A3, 40 capital A3, not considered as an application. No set off reduction from early years and excess spend. Please. I'll come back to you, sir. 11.1A, which is not in the slide, 11.1A, 15% of gross is deemed to have been spent, deemed to have been applied. It need not be spent. There is no time limit. There is no form required to apply for accumulate this amount. This provision was, this particular provision was omitted in income tax bill when it was introduced in 2025. Whereas when the act was, when it became an act in the year 2020 August month, it was enacted and brought under section 341(5). Our 343 is still there, which says, which specifies the NPOs to, sir, on the slide, which specify the NPOs to accumulate not more than 15% deemed accumulation and compel the NPOs to invest in modes as specified under section 350. Okay. Okay, final part. They say even under income tax present act 2025, comparative analysis 341(5) versus 343. 341(5), it's a replica of 11.1A, that 15% need not be spent. It's a deemed application. Whereas 343 talks about 15% should be accumulated and invested under as specified in the modes under 350. Okay. Okay, then. Accumulation under section 11.1, explanation 2. If application falls below 80% of the income for any specific reason, then NPOs have the option to accumulate the unspent income and spend it in the subsequent year by filing Form 9A. This condition of filing Form 9A was introduced in the year 2016 by Finance Act 2015 from 2016. Form 9A to be filed at least 1 month before filing ITR along with the filing of audit report. In applicable belated filing of 9A, application for continuation delay up to 3 years shall be made to Principal Commission of Income Tax by Circular number 15 dated 19/7/2022. So here, Form 9A, I said we will have to file it 1 month before the due date for filing of the return. Why? Because normally circular says all it should be filed along with the due date for filing of the ITR. Unless our assessee says they are going to accumulate either for the period of 1 year or 2 years, our audit report cannot be complete. We'll have to go by the first assessee should say whether they are going to accumulate for a period of 1 year or 5 years. Then only our audit report will have to say the assessee is accumulated for 1 year or 5 years. accumulation for the next 5 years under section 11(2), where there is a shortfall in applying 85% of the income in a particular year and the organization needs more than 1 year to spend, the NPOs can seek time to apply the short utilized income for a period not more than 5 years. They should specify the purpose for which accumulated, board resolution to be enclosed. Multiple purpose can be specified. Purpose is to facilitate NPOs to utilize the funds for charitable purpose. Whether capital or revenue doesn't make any difference. However, it is preferable the purpose should be towards a significant expenditure. Until the same is utilized, it should be invested under section 11(5). NPOs can seek change of purpose for which originally permission is sought for. Accumulated funds cannot be donated to another trust since 2002. Accumulated funds, when taxable, applied for purpose other than for which accumulated, ceases to remain invested under section 11(5). No set-off or deficit of earlier years. It cannot be donated when it donates the accumulated funds to another trust. Tax in the same year when period of accumulation expired, tax under section 115 BBI. As I told you, circular, that is how the measures of application not apply. 11(1), Form 9A, income has not been, that is the reason. 9A should specify the reason. Form 10 should specify the purpose for which you are accumulated. So due date, original due date for filing the Form 9A and Form 10 as per the Act is 2 months before the due date for filing of the return. But subsequently, circular, they had given the circular, it should be filed, it can be filed along with the due date for filing of the return. But it is preferable to file along with the audit report, or just it should be filed before the filing the audit report. This Form 9A, what is the example which is given? This is Form 10. Resolution to be Form 9, Form 10 resolution to be passed. Form 9, the resolution is not necessary. Before 9A was introduced, a mere undertaking by the assessee will be suffice. Withdrawal of exemption under section 11(3), that deemed income. When the trust does not comply with the conditions under section 11(2), violated accumulated income loses its exemption and become taxable. When will it be taxable? Accumulated income will be taxed as deemed income and tax if income is used for non-charitable, non-religious purpose and no longer set aside for that. No longer invested as per the bonds specified under section 11(5). Income is not utilized within the time allowed, maximum of 5 years. Income is given to another trust under section 12W, 12AB or 1023C. It is taxed at the rate of 30%. Year of taxability, year of actual violation, when it is used for non-religious, non-charitable purpose. Investment is not maintained as per section 11(5), when the year of investment ceases. Not used within time, last year of accumulated period, maximum 5 years. Paid or credit to another trust, year in which it is. Before the amendment, before 2022, it was utilization is allowed within 6 years, 5-year accumulation plus 1 year grace period. Tax was levied in the 7th year if unused. After the post amendment, no grace period. Income must be used within 5 years. If not used, it should be taxed in the 5th year itself, or earlier if a shorter accumulation period was chosen. Example, post 2023 rules. Accumulation year 2023 financial year, period chosen 22 years. Expiry date 2025 March, taxable year if not 24-25, 23-24, 5 years 29, it is financial year 28-29. Business by a trust under section 11(4). Business itself is property of the trust, 11(4). Business incidental attainment of main object, 11(4)(a). If a trust owns a business, then business itself property held under trust. AO has the right to assess the business income independently. Additions made, if any, is treated as if the income is not used for charitable purpose. Excess become taxable under normal income tax rules. NPOs holding business as property under trust under section 11(4), implication of 20% is not applicable. The assessee which was running a community hall, not in contemplation of trust deed. It was held, business was not held under trust under section 11(4), but business is carried on by the trust under section 11(4)(a). This is pronounced in DCIT exemption was Chennai Kammavar Trust. Business should have been either settled at the time of formation or incorporation of a trust, or should have been acquired with the help of funds originally settled upon. This is also in the ADA case it was decided. Excess income under section 11(4) shall be taxed as applied for non-charitable purpose in CIT versus PSG and Sons. ADA New Noble Society judgment is suitable for any research scholar who wants to do PhD. It runs to several pages. Every time when you read, you get new ideas and you learn also. 11(4)(a), exemption granted only if business is incidental to attainment of main objects and separate books of accounts are maintained. Here under New Noble Educational Society, business cannot be said to be incidental only because surplus is applied for charitable purpose. Business can be said to be incidental only if such business is related to main objects. ADA, it has overruled the judgment in Tandi Trust, wherein it was in the Tandi Trust judgment, originally Supreme Court has held that a business whose income is utilized to objects, it was considered as incidental. In the case of ADA, it has held Tandi Trust ratio is not applicable. It has held even if surplus is utilized to a charity, it cannot be considered as business held under trust. Business, trust or institution cannot claim exemption under section 11(1), 11(2), 11(3) for any unless business is incidental and trust maintains separate books of accounts. Summary is business not related to charitable purpose, no exemption. Business related to objective plus separate books of accounts maintain exemption allowed. If, for example, trust runs a hospital and a small pharmacy within it, the pharmacy is incidental to the hospital. If separate books are maintained, exemptions allowed. 11(5), permissible investment for trust. What are all the various government saving certificate, post office saving bank accounts and scheduled bank, UTI, government securities, debentures, public charter company shares or deposits, bonds from certain financial corporations provide long-term finance for industrial development, bonds from housing finance companies, bonds from a company developing infrastructure, investment in immovable property, but not machinery or plant unless it is essential to building use, deposit IDBI, any other form of investment as may be notified by and prescribed by the government. Key definition, long-term finance, loans repayable over at least 5 years, public company as defined in the Companies Act, urban infrastructure, projects for clean water, roads, transport, waste. To maintain exemption, investment of the trust, including accumulated funds, should be invested only in safe and specified instruments, mostly backed by government or regulated entities. Corpus donation. Corpus donation do not require application until 31/3/21. Finance 2021 has brought in many changes towards application of corpus. Expenditure application out of corpus is not allowed as application, whereas it is allowed in the year of replenishment. Replenishment period is restricted to 5 years. What if not replenished? That is still, we'll know only in the year 2027. If the assessee is not able to replenish the funds within 5 years, what is going to, whether they are going to tax it or not, or they leave it like that. Why I am mentioning this is, in the Act, in the 40IA and 40 capital A3, they say it should be only inadmissible expenditure. They only say it is not allowed as an application. Whereas when you file the ITR, those through getting taxed, it is not allowed. It is not only reduced from the application, it is also getting taxed. Donor direction or letter is necessary to treat donation as corpus. The intent should be specific, should spelled out by the donor. Condition is to be invested under section 11(5), not to be used for donating to other trust, maintains corporate separately and applied for the purpose for which you receive. Our same representative. Donation of capital received in kind should be immovable property, others assets such as ambulance, medical. So you were asking some other question.
I cannot have corporate collection from now on, and everything should be 85% should be fixed of that.
No, corpus, you can receive corpus funds, sir. Corpus donation you can receive from your any donor, you can receive the corpus donation. It should be applied only for a specific purpose, for and whatever purpose for which you have received. Normally, that's what corpus funds should be utilized only for the mode specified under section 11.5. That it should be under immovable property or for it cannot be for a revenue expense. You can earlier until 31 March 2021. It was only claimed as an exemption 11 only. The department were not worried about whether you are claiming, whether you have received the fund, what you have done with that. There was no question. 2021 they brought in various amendments saying it should be kept separately, and it should be used only for the purpose for which you have received. And if not, you will invest under section 11.5. Yes, then no questions. As long as the product keep the corpus fund liability side, it be there. But whether it is supported by the assets in the that forms of in the asset side, where it is invested, whether it is invested in immovable property or in bank FDs or bank balance, that is yeah. Nothing, no problem, no problem. You don't need to worry. Only if you withdraw from the corpus, only all these problems arise. But till 2021, as I repeating, department were not worried about at all what you are doing with that corpus donation, what you have received. Here simply we'll say corpus donation, gross receipts, voluntary contribution, and a normal this thing, and 11(1)(d) exempt. That's all. Then you would, that as in the initial few slides earlier, excess spent is normally out of the excess 11(1)(a) what you have accumulated, and then corpus fund or loan or borrowings. Loan or borrowings will come the same, almost similar amendments have come. This. No, sir. No, only the corpus has to be maintained separately. Corpus, because corpus fund, liability side, capital fund or corpus fund, loan fund, whatever it be there. And on the asset side, corpus fund should be backed up by the. That is what now, earlier till the new act has been enacted, earlier 15% what you have done with it, no one were questioning. Now in the 341.5 which I talked about, that is still my understanding is 341.5 and 343 is contradictory. 341, 345 is contradictory. What, sir? Yes, sir. That is either it should be kept separate. That is what still, as I told you, that I am not clear. It should not be the purpose. Once initially when the income tax bill was placed in the parliament, 11(1)(a) was omitted. That is 11(1) small a was omitted. In that 343 alone was in place. Then in that case, 15% whatever you are supposed to have deemed to have been applied, they said deemed to have been accumulated. Now 341.5 has brought in consonance with 11(1)(a), but 343 is also there. Yeah, I'm talking. Compare it just because these are important. This thing I said that refer the new bill also, because these are most relevant for us to next year. It will create a more problem for we started accountants while filing the. It should be mentioned. And earlier also, it is always, even it is better, capital fund probably excess or surplus of your IND should be added. And corpus fund should be liability side better, you keep it separate, that would have been better. Because otherwise, otherwise what will happen when the income tax assessment, under capital fund, your P&L, just to name, it's only IND excess of income is also shown under capital, and your corpus is also added to the shown in the capital. Income tax officer, what they will say, any additions to capital fund, where is the proof and so declaration? Corpus should be kept separately. Yes, sir, it should be allowed. Only when you draw from the, see, one simple, sir, because money has no color. Corpus fund 1 crore, if you have collected, showing it in the liability side, then if you are if that is being represented by bank and fixed deposits, no one can question whether you are drawn from the corpus or whether drawn from capital fund or from own funds. No, there won't be any question. And when you are on the earlier slide, few slides earlier which I showed, whenever there is a excess spent, excess applied, then only how we have how we have done. Again, that is also 3 years back, 4 years back in your ITR, they did not specify, they did not ask us how did you meet the excess spend, excess application. 3 or 4 years back only they asked us to specify from where you have withdrawn the money. Then only they brought this amendment. That they brought this amendment also. It will be in capital fund. It will not be in corporate. It will be in capital fund. 15% accumulation, whatever which are accumulation, deemed application, whatever will be under capital fund. It won't be under corpus fund. Corpus fund, capital fund always it is a better excess of income over expenditure is always getting added to the capital fund. Sorry, sir, I'm not. Sorry, I didn't get you, sir. I'm not able to hear you properly. Yeah.
NPO guidance note is there, no, format. That doesn't support this view. You are telling no, sir, 15% accumulation and the excess of income over expenditure should be kept as capital.
Capital fund, correct.
And corpus should be kept separately.
Yes.
But there is no distinction in the forms. And our NPO guidance note also, that two-way is not supported. They treat both as same.
In our balance sheet,
It's okay. But we can present like that. But whether will it be as per our format prescribed is the question.
The new format which you are talking about, sir.
Yes, sir.
New format which is unconditional fund, conditional grant which you are talking about.
That is what I'm
Yeah. Yeah, therefore there is no, both are getting merged. That
yes, sir. Yes. That is what I'm talking.
Yeah, correct,
Okay,
sir.
thank you, sir.
Yeah. Yes. Yeah, that is easy. Yeah. His voice is more. Sorry, sir. Yeah. So please give mic.
So when you withdraw from the corpus, that surplus IE which you have already combined with the corpus, no?
What, sir?
When you withdraw from the corpus,
Yes, sir.
this portion, that is the IE portion. So we
In
have to
fact, that's why
justify- we have to
corpus
justify, no?
What, sir?
IE portion we added to the corpus. When you withdraw for later years, when you withdraw, you have to justify, no?
Yes, sir. That was replenished. That's what corpus fund. That's why in our earlier, when we spoke about this thing, it should be kept separately. Corpus donation should be maintained separately. Then only we will know what is corpus, what is from, as Mr. Satish mentioned, what is whether we are drawn from the corpus or whether you are drawn from 15% accumulation. Because there are only 3 possibilities. From within the income, if I am and I am spending more, it should be either out of 3 only, either from the accumulated under section 11(1)(a) or corpus donation or from loans and borrowings. So all these years until 2022, there were not questions were never raised, or even department or act was also very silent. 2022, when they brought this amendment only, they were very clear. They wanted us to. They didn't want to, or they don't want us to take advantage of these provisions, and all these things have come.
The restricted fund and that is given in the new.
And the new
Format.
yeah,
So what is restricted? What is unrestricted?
restricted corpus, sir.
Corpus only.
Corpus or loan funds are restricted. It can be only for the purpose for which you received. Unrestricted capital fund and other things.
Donations are coming.
Donation, voluntary contribution come under in IND itself, no? Restricted fund only in the, yeah.
Some CSR fund came.
What's that?
Some CSR fund came, or some fund came for a specific purpose.
That didn't become restricted, sir.
So that we are calling as restricted.
Yeah, but sometimes earlier, nowadays it doesn't, earlier building fund, in our early days, when the school is run by the organization, they will say building fund.
Yeah.
Building fund, in other words, it's a restricted fund. It should be specified for the, or it amounts to almost corporate. It should be maintained separately, and so it should be spent only for the purpose for which you receive.
That is called restricted.
Yes, sir.
Okay, thank you.
Yeah. 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 That including corpus, sir. I'll like that. Yeah, corpus, slide number, sir. Yeah. Here, yeah, yeah, gross receipts including corpus. Now, corpus fund, no, there of course, there's corpus fund, the 11 only, it should be maintained separately. Gross receipts, including corpus only. No, here, computation. Computation maintain. But in a computation, all varakodadu, it should not come. That's what it should not come. Gross receipts, the gross receipts, even though it includes corpus donation, it doesn't fall under 15%. 11, it should be separately shown that I will, maybe in the last slide I will come, because this is last slide I brought it. Yeah. That I will explain, sir. In the last slide I have brought it. Yeah, corpus receipt, but only thing here we'll have to say less corpus donation has to be shown separately. 11 only it should be shown exempt and be drawn from the corpus. The last slide I am having, sir. I will explain that is. Okay, here. Yeah. That is what in my maybe came just now or earlier, I don't know. Because what will happen now within 5 years if you don't replenish, what is the issue department is going to come out, we do not know. Because as I told you earlier, because 40A IA, that is non-deduction of tax, 40 capital A3 cash expenditure, the Act says it is not considered as an application of income. It is only inadmissible. Whereas when you file the ITR in the last 2 years, 3 years, it is getting taxed, even though it is nowhere in the Act say it should be taxed. They said it will not be considered as an application, but it is getting taxed. No one knows what is the reason. Naturally, even in a business, because the 40A, all provisions fall under business provision 28 to 44. Even in a business, this thing, if you are, when there are certain disallowances under 40 IA and 40 capital A3, so either the loss gets reduced or profit gets added. When you are incurring a loss gets reduced, nowhere it is getting taxed. Whereas this particular under trust alone, why this provision is coming, no one is clear. Luckily circular that when you transfer of funds to another trust, 88%, only 15% disallowed. Last year, that is 2024, they brought out a circular saying that it is not going to be taxed. But this particular thing, still it is there. What's that?
Section 11.1 explanation talks about only 2 disallowances, no sir. Disallowance on account of TDS and on account of interest.
Yes, sir.
TDS on account of cash payment. Both the disallowance only it talks about. But logically they cannot tax anything else.
Yeah, that's why logically it should not be taxed. That is what this thing also. But irony is, it is while filing the ITR, I think many of our members would have faced this problem that it is getting taxed. I will file the ITR, it is getting taxed. No one has come for our senior person is there. Sir will be able to throw some light on that. So what is your opinion, sir? Okay. உங்களுக்கு அது மாதிரி எதுவும் வரலையா சார்? சொல்லுங்க சார்.
Is it the right way to use the word capital? in the
கேபிட்டல்
balance
வேருக்கு பேலன்ஸ் ஷீட்ல கேபிட்டல்
balance
ஃபண்டுன்னு
sheet.
சொல்றதுக்கு.
Why?
அதனால தான் இப்போ
Why? Because I never use the word capital in the balance sheet for NPOs. First thing is corpus. Other one is general funds.
okay, right. Sorry, general fund or capital fund? Yes, but even though strictly speaking, what you say is correct. It should be either general fund or capital fund. Capital fund, it is not. I stand corrected.
General fund.
I stand corrected. But it cannot be that general fund will all this thing that excessive income will get added to general fund, and corpus fund only the corpus donation what you have received will be there.
So that matching would be very easy.
Yes, correct. Corpus fund is kept separately.
Yeah.
But that nomenclature, whether to use general fund or capital fund, I stand corrected. It will be general fund.
Gen-
Okay. This is a corpus donation, application not allowed, replenishment corpus, repayment of loan, it is allowed. 1020, again, what are the application before 1424, 142021, what are not to be replenished, not allowed to be replenished or repaid, replenishment within 5 years of original application, conditions to be satisfied. It should not be towards corpus, not in cash, TD tax deduction, actual payment, no carry forward, no benefit to specified purpose, and it should be applied within India. Borrowed funds also similar to corpus fund, the provisions have been amended. Applied out of loans and borrowings. Finance Act 2021 brought in certain amendments that are similar to corpus fund. Application out of loans and borrowing not considered as an application. On repayment, it is considered as an application. Period of repayment is restricted to 5 years. Again, when you are any organization, when they go and borrow from the bank, you can't expect the repayment should be within 5 years. When you're borrowing a huge money, it may be 7 years also. What will happen if the repayment is beyond 2 years, after 5 years? These are all the questions still remain to be unanswered. How the department is going to react, or our income tax that the authorities have to come out with a clarification. When corpus is not replenished within 5 years, whether it is going to get taxed, or you can't only replenish, we'll have to repeat just like that. Again, say, repeat, such repayment shall not be allowed there for buying an treatment, short-term borrowing, long-term borrowing. Charitable receipts 5 lakhs, application out of charitable receipts 4 lakhs, assets purchased. So charitable receipts 5 lakhs, then the deduction under 15 per 75,000, net is 4 lakh 25. Application out of normal this is 4 lakhs. Application allowed for asset purchased 25 minus 10, loan avail 10,000, repayment of loan 3,000, total accumulation is tax, there is 12,000. It's 10 minus 12,000 is this thing. Impact of these two amendments, corpus and this thing. NPOs cannot carry forward the deficit. It is applicable out of corpus, restricted to 5 years. It has to create investment and plow back within 5 years. Application of the corpus and deficit remain outstanding as on 31st March 21. It cannot be allowed to replenish against future income. In such case, corpus fund gets eroded. This amendment defies the very purpose of corpus being protected, which you rightly pointed out. This donation to corpus or the trust not treated as application. Capital gains under section 11(1) capital A. Reinvestment of capital gains is another capital asset is the income includes capital gains. Gains as per books, sale minus costs, not computed under capital gains. Investment in FD for a period of minimum 6 months is considered a reinvestment in capital assets, circular number 24th September 1975. FD should be for a minimum period of 6 months. When the new income tax bill was introduced in the year February 25, this provision was omitted. After various representation, it was brought in relevant under section 341. However, if the entire sale consideration is offered as other income in the IND itself, then the question of capital gains does not arise. Any application towards objects of the trust out of that sale considerations also is considered as an application.
There is a situation, the source is only 100 rupees, whereas the application is 120 rupees. In that situation, there is a need of 20 rupees for source. This 20 rupees I'm borrowing from outside. This 20 rupees, should I show it as a source of income? To
It will-
match with this application.
No, sir. Oh, sorry. I'm sorry.
To match with the application of income, 120 rupees.
It will come, it has to, sir, because under normal 100 rupee gross receipt is 100 rupees, like 15%, 85 rupees.
Hmm.
So we are,
Without that,
no, I'm just saying, well, normal 15, 85 rupees, whereas you are spending 120 rupees, that 120 rupees should be other 15, that is 15 by 35 rupees.
35
How it is made up of, we'll have to represent in the final this thing. That the last slide, I will have that this thing. Cost of acquisition, 100, depreciation, it is under register under section deduction allowed for depreciation is not allowed, since you are, as we discussed, that cost of acquisition already treated as application. So sale consideration is 45 rupees. The sale consideration will be treated as regular income and same be applied to the object that or invest in another capital in 11(1)(a). If a business trust or institution, 100, depreciation 40, WDV 60, sale can 45, loss is 15. This is a normal under business this thing to be done. No set-off or reduction allowance or any excess application of any of the preceding previous year shall be made for computation of any required to be applied or accumulated during the previous year. For example, excess application assessment 24-25 cannot be reduced to determine the income to be applied or accumulated during the previous 24-25. 10 or 15 years back, Madras High Court was allowing the assessees or trust to adjust the excess application made in the previous year. Now, of course, different courts have taken a different this thing. Now, Act itself has been brought in very clear. Act has been amended. No longer it can be done. The rationale behind this particular provision not allowing the set-off, because application for charitable religious should be out of three sources, either out of your current year's income, accumulated or unconditional own funds, corpus of the funds, and borrowed funds. Religious not defined, sir. Nowhere, as I told you, religious not defined. But religious trusts have a lot of other advantages, as you write, because even that anonymous donation, all those things, it is not considered. Basically, even if a Christian institution, many of the Christian institutions, which all of us will be handling in our professional this thing, even though they are running the schools, most of this thing, they don't get 8EG. They don't apply for 8EG because part of the income, they have the church and parish, they have this thing that is not, they get only 12A. They don't get 8EG. 8EG is not allowed for those religious trusts. 5% of this thing is there. There also, but religious come charitable. Nowadays, department, they give only 12A, not 8EG. Because there is a 5% of the income should not be, more than 5% cannot be spent towards religious purpose. That clause should be there. Religious come charitable. If it is charitable means religious distinctions should not be there. Then they don't give totally, they don't consider. Only for that 5% is a rule comes only for 8EG. Totally religious also gets, charitable also gets. That 5% restriction is brought in only if you need 8EG. Other they ask you to remove that this thing. Nowadays, in the present circumstance, 8EG is irrelevant for any individual or even corporate. In fact, even in corporate also, that concessional rate of tax which they are giving, so it becomes irrelevant. 8EG maybe even now. That's why even in the condemnation also, wherever our assessees are not able to file the renewal within time. 12A they are giving the 12A their condemnation is given, not for 80G.
Is for 2025 also? or
What's that?
in 2025 new act,
New bill,
the new bill,
new act, sorry.
the same differentiation is continuous,
For what, sir?
charitable and religious,
Yes, sir.
same thing.
Yes, yes. See, in fact, after the initial, when the bill was, in fact, as mentioned in fact, when I brought the book in the month of April, 2025, April, when I brought it, at that time, or 5 or 7 representations which I have made to the authorities, that's, I don't want to say, so many people have made. And all the 5 or 6 have been implemented. All that really, so nowadays almost first the 1961 Act and 2025 Act, not much of a difference. In almost all the provisions, not only related to charitable trust, almost all the provisions have been, only section number have changed and different kind of these things have. And if you go to the definite 215, now it is 223. 215, there is say that 11.4a, all those things have been brought in there itself because a GPU has been brought in there. But a new act, if you really compare 215 and 223, you will think that no longer that the assessee can or trust can carry on business. But 340, unless you refer 346, it doesn't match. That why I am saying, because there is everything is almost same, sir. Depreciation, as I mentioned earlier, in respect of any asset, if the cost of acquisition which has been claimed as an application of income, depreciation not allowed since same or either pre-FCA. If asset acquired out of loan, full amount cost of cannot be claimed as application, whatever loan from loan amount, whatever that be deducted. Any same, like under section 11, any sum payable by any trust shall be considered an application of income in the previous year if where such income is actually paid. Transfer of funds to another trust, only 80% eligible donation is allowed as an application. Transfer out of accumulated funds is not allowed, it's not possible. Transfer to another trust registered under section 11 and 12 is only permissible if not considered as a violation. Transfer of funds by charitable trust to religious trust is also not possible. What are 40A IA, that is a non-deduction of tax. 40A3 is cash payment in excess of 10,000. And again, as we discussed earlier, as per the Act, it is not considered to be applied, whereas while filing ITR, it is considered as it is being taxed. 216 ST, cash donation except 2 lakhs is not allowed. Our taxes paid, if any, can be considered as an application. Conditions for exemption of income for trust under section 12A, 12AB. Income must be derived from property. Property should be held under trust. Trust should be wholly charitable or religious purpose. It should be applied or accumulated for charitable purposes within India. Components of income. Income of trust is from charity, from activities, other income. What are from charity? Non-anonymous, anonymous donation. From activity, investment activities, business activities, other income, rental income, capital gain income. Non-anonymous, voluntary contribution, corpus donation, business activity, corpus business and incidental business, 11.4a. Voluntary contribution with a specific direction should be formed part of the trust. If invested under section 11.5, it is exempt. If not, it is taxable. Voluntary contribution without specific direction forms part of the income property held under section 11.1a. Specified violation under section 12AB. Income applied for purpose other than for which other than towards the objects. Income from profits and gains non-incidental to main objects and separate books of accounts are not maintained. Religious trust applying part of the income for the benefit of public. Charitable trust applying income for the benefit of specific caste, creed or religion. That is, of course, SC and SC are exempted. Not complied with any requirement of any other law. This is a provision which they introduced 2 or 3 years back. It's a draconian provision because our not complied with requirement of any other law means our assets is they may PF case will be there, FCRA, this thing might be there. FCRA at least they can accept, Home Ministry, but PF this thing, then some notice, what would have been if the department comes to know about that there is some this thing pending, they can issue notice for withdrawal of exemption. Cancellation of registration. If specified violation occurs, our principal commissioner CIT may call for necessary documents and pass an order after conducting the inquiry, either cancelling or not. Benefits to specified person, 13(1)(c). Any part of the income, property ensured directly or indirectly for the benefit of any persons referred to under section 13(3). They are not eligible for exemption. It is taxed at the rate of 30% under section 115 BBI. Penalty under section 271 WAE. First violation 100% of the benefit given. Subsequent 200%. Non-applicability of relaxation of 56(2)(x). 13(2). Prohibited benefits to persons under section 13(2). Loans without adequate security or interest. Use of property without adequate rent. Excess payment for services rendered. Services purchased. Inadequate remuneration for services. Excess payment for purchase of property. Inadequate consideration for property sold. Diversion of income. Investment concerns where specific persons have substantial interest. Not less than 5%. Relative definition, spouse of the individual, brother or sister of the individual, brother or sister or spouse of the individual, lineal ascendant, descendant, spouse of the person referred to ABCDE, any lineal descendant. Substantial interest, 13(2)(h) that refer to case where person substantial interest. Relative again explained, parents, grandparents, individual again. What's that? Yes, sir. Yes, sir.
Executive member in a
Please sit down,
particular-
sir.
Yeah, there are
Please sit down.
7 executive member
Yeah.
in a particular society, and their relative will be in several numbers, maybe exceeding hundreds. How it will be given?
If you ask me honestly, I don't give. It's quite difficult because these are only unless specifically if you come across, when you are signing the audit report, when you come across, you have to specify, otherwise you can just ignore, sir. Otherwise, it is not possible. Otherwise, you will put our assessee in problem. Because unless the assessee says, because even a corporate also, unless they say their brother or sister, or because there at least they maintain a register
Yeah,
for the purpose relative definition that
but interest, there is no such system.
there is no such thing. We'll have to, unless you come across specifically directly, because in some places trustees themselves receive remuneration.
The trustee, no problem.
Then that in that case we have
But
to.
their spouse, no problem.
Anna,
But their brother, sister,
that and all, unless they
grandchildren, all these, if we start
In-
giving, will become a
to say
Business.
to be safe, if you want, we can get a declaration that none of the relatives are being employed or given. We can get a declaration from the
benefit.
assessee.
Yeah, yeah. Okay, thank you.
Yes. Specified persons under section 13(3). Author or founder of the trust, major donors who contribute more than 50,000, family members or trustees or managers, relatives, other. Here, I wanted to just, wherein for many of the trusts, we are the auditors, we may donate more than 50,000 to a particular organization. We may. In some cases, we might have given also, because we are connected to the trust for their objective and other things. Whether you can be appointed as an auditor. More than 50,000 if you are donating. Huh? Yeah. That is one, that is still, that is, what, sir? Yeah, there are cases they might have. No, other trust case, they might, there are examples, that's what, there are this thing they might have given. For example, just for Shankaracharya Rao, this thing. I'm not just mentioning because religious that because you like the leader, or even for DMK or any other this thing that trust you are doing the audit. When you like the leader or this thing, you might have donated. Congress, any trust for, without naming any specific this thing. In that case, if you have donated, what will be this thing? Forfeiture of exemption under section 13. Private or religious purpose not for public benefit, trust for a particular religious community 13(1)(b), benefit to specified purpose, then it tax under section 115 BBI, and investment modes other than 11(5) 13(1)D. Tax computation. Institution has not obtained, will not be, institution has not obtained audit report, institution has not maintained our books of accounts, institution has not furnished return of income within the time allowed, and 215 where provision is violated. An income to be computed on the, after allowing deduction for revenue expenditure, income or objects of the trust, no deduction for because normally capital expense allowed. In case when you are forfeiture of exemption, at that time, income will be computed. There won't be any deduction for capital expenditure, income expenditure from opening corpus, expenditure for loan or borrowing, depreciation respect of assets whose acquisition has been claimed as an application of income. In that particular year where the forfeiture is being done, that particular year, if you purchase an asset out of the, then depreciation is allowed on that particular year alone. Contribution or donation to any person, whatever 48(3) for not to apply, no deduction to any other action allowed as set up. What's the previous slide? Yes, sir. Yes, sir. The capital, if you are normally in asset, cost of acquisition of capital asset is being allowed. Normally in asset, if you purchase an asset, cost of acquisition allowed as an application. But in the year of when you have violated the provision and for exemption is not there, then it don't be allowed. Whereas the asset depreciation normally not allowed, but during that particular year, any asset is purchased and that particular depreciation allowed. Anonymous donation. Anonymous donation received in excess of the higher are the following: 5% of total donation received or 1 lakh of rupees. Whereas exception is only religious trusts are exempt from this particular provision. If any religious and charitable trust receive anonymous donation for educational and medical purpose, they are not exempt. If they are received for religious purpose, it is exempt. Again, tax rate at 30%. Here again, what are all the, as long as you have the record of the identity indicating the name and address of the purpose, it is not necessary you should have the PAN card. If the donor identity is proved with the Aadhaar card, that is still sufficient for us. Only thing when you file the 10BD, you cannot, they won't be able to get, without PAN number, they will not get the 8EG deduction. Yes, sir. Otherwise, that's why, in fact, what in certain cases I have just advised my this thing, unless and otherwise that particular transaction supported by some identity, they'll have to, before making the payment of before making any donation, I had told them they'll have to attach that. In recently, many political. It will be, sir. It will be, certainly it will be, unless, see, the onus is on us. Onus is on the part of the assessee to prove that identity is proved, rather. If you are not able to prove, genuine problems are there. The assessee may have the genuine problem, but it may not be. But we don't, department, because we'll have to refer the 10B, when you file the report, when you file the audit report, you'll have to say whether donor, all the name and address should be specified. Sir, identity card, yes, copy of the PAN, Aadhaar has to be obtained, sir. Copy of the Aadhaar or PAN should be obtained. It may be, yeah, only because we audit, we as auditors have to certify, and ultimately assessee will be put, we will have to advise, educate the assessee that they should get. No, cell phone number, today, tomorrow I will change, day after tomorrow. What, sir? It's not for religious, sir. Huh? Yeah, all these, many of the provisions are political only. And again, anonymous donation received by only religious trust, exempt. Only charitable trust in excess of 5% or 1 lakh, whichever are here, tax at the rate of 30%. Religious and charitable trust, receipt for medical or educational, then it is tax. If it is general donation, it is exempt. Specified rates of tax under section 164(2) for unregistered not spent, applicable slab rate. 115 TD, that is our accredited income, exit tax and accredited income, violation of 3 conditions, MMR at the rate of 30%. 115 BBC for anonymous donation subject to 30% tax rate. 115 BBI from assessment year 23-24, so non-compliance tax rate at the 30%. Those who have not got the registration, unregistered, and those who have not obtained registration in section 12A. 12A. Okay. No, but okay. Okay. Yes, true. Okay. I'll stand corrected. Yes, sir. That question was raised by him. Yeah. It is not possible. It is not possible that I will have to. Calculation of taxable income, unregistered treated as AOP, income calculated it will be treated AOP, but only thing that 88%, 15% but this thing is not there. So, non-renewals, subject to exit tax under section 115 TD, net worth as per 115 TD. Non-maintenance of books, exemption withdrawn from particular year, income computed under section 13, 10 or 11. Specific transaction, anonymous, specific person, transaction amount, tax under 115 BBI, 115 BBC. 115 BBI, accumulated but not spent, PIM 9A, 11.1 capital B, accumulated spent but not as Form 10 cases, applied to purpose other than charitable religious purpose, ceased to remain invested under section 11.5, not utilized for the purpose for which accumulated, and that number, benefit to specific purpose, income not invested under section 11.5, income applied outside India, no slab rate, tax will be tax the rate of 30%. Yeah, there, yeah. If that is very, the particular this in 11 this thing there. But normally nowadays it income before the commencement of the act. Income applied outside India unless specific permission is obtained by the CBDT or government, it is not allowed. Yeah, please.
Object is, if any universal project for the welfare of human being organized by outside India. In that organization, India, this trust is participating, and this trust is contributing some amount for the project. I mean, some some HIV development or this medicine developments and all. In such a project, if the amount applied from India to outside India, it is permitted.
Okay, it's only again I'll interpret for any project, any this thing, it carried on activities carried on carried on in outside India. If you are going to participate along with that, it may be considered. But in my personal this thing, maybe here I again in your case, since I have gained, had a practical experience and this thing, I will accept it. Otherwise, then it will be, to my knowledge, so far I have not come across.
Because I had two. One case was permitted. The another case, the another CIT denied it.
Ah.
It is depends on the case.
In fact, one more, in the case of IIT, they had one project for which they acquired machinery from outside India, from abroad rather. And they have brought in India, they utilized the money. But department, NFAC, under NFAC, based on that, they have disallowed this thing. They are saying they applied the money, they have disallowed the particular application. Then I wrote to the commissioner and then said that if I have not, it's not income applied outside India.
Benefit.
I only I have not carried out any act outside India. I have purchased the machinery for
Benefit.
for application of income within India. That machinery is going to be utilized within India. For that purpose only I made this thing and ultimately allowed.
And then one more practical.
Sorry, sir.
One more practical. I had this. I formed a society, registered with the Registrar of Society. With that memorandum and bylaw, I applied for a PAN card. In that PAN card, I selected trust. The status is a trust. The PAN application processing center refused to tick the trust. They said there is no trust deed. I explained them very clearly. Even then, they didn't allow. Then finally, they said, you go to income tax office, get some sort of letter. Then I will give a trust status. I mean the T. Then I came to meet the commissioner. He said, sir, I'm not bothered about the PAN card fourth letter is T or whatever it is. Okay. Even the AOP status, A also, we are considering as a, we are considering our assessee for 12AB. Provided the determining factor is only the objects
correct.
You are articulating in the.
Exactly. I fully agree. In my another experience, this thing for World Economic Foundation, I have applied for it. So that fellow has given, PAN center, they given F. Trust, the F, they given trust, they did not agree, they have said F firm, under F it has gone.
Oh.
So I was not able to get totally ATG. Later on, then finally we got it. Let's say these are all PAN felicitation center has this problem. Total receipts under 50 amount required to be spent actually taxable at the rate of 30%. Tax on accredited income, there are 115 TD, converted into any form which is not eligible for exemption, merged with any other entity, does not have 12A, 12AB or 1023C. Failure to transfer assets upon dissolution within 12 months. Accredited income on MMR on net worth pay within 14 days. Fails to pay will attract 1% per. Registration is cancelled. Modified but not applied for re-registration. Applied for re-registration but application rejected. Not applied for renewal on expiry. This is a major thing. Now this will come. Now all this, nowadays all the 5 years expired. Now if you are not going to apply for renewal within the next, already should have applied before September. If you have not applied, then it's going to be a problem. You may come across that 115 DD. So yesterday I met the commissioner. So at that time, what he had wanted me to just, when I told him that I'm going to to speak here, then he advised it's only for the benefit of the members who are present here. If you applied for renewal of 12A and ATG, waiting for hearing notice to be issued, he wanted us to keep the following documents ready. Original registration under section 12A and ATG. Original registration, not before 2020, at the time of initial under 25. Financial statement for the last 2 years, 23-24 and 24-25, to determine whether you fall under 10BB or 10 years or 5 years. Then we are receiving grants from government, registration with Durban. If you are receiving grants on foreign contribution for FCRA registration, If you are running schools and colleges, approval from concerned authorities. And there are 6 mandatory clauses. If it confirm whether they are available in the trust deed. If not, resolution to incorporate the same. Details of properties wherein rental income is received. If you are showing rental income in your IND, then properties detail they want us to see. What, sir? Yeah, they will now what happened? Who are all applied before June? Before June, they started getting the hearing notice. Those who applied between July to September, which is as per this thing, that is the last date. But they cannot, condemnation will happen only if you have applied beyond March. But July to September, we will be receiving notice before December. What the commissioner says, we will be receiving notice before December. By the time these documents are kept ready, I will be able to process it easier. What's that? No, they're all simple. They're all, of course, there are there. But these are all basic, this thing there. These are other things you can normally collect from immediately and then do. These things you'll have to collect in. And this is how the tax and accredited income, our friend is waiting for him to. And what are all the various forms? Form 10A, Form 10AB, 10AC, 10AD, Form 10A at the time original, that is initial registration, you form a new trust. 10B, 10BB, ITR 7, Form 10, Form 9A, Form 10BD, 10BE, and relevant rules and mode of filing Form 9, 9A. Our friend will be talking about all these forms 9, 9A, 10, 10AB, 10B, 10BB, 10BD, 10B, ITR 7. This is a final, this thing. Voluntary contribution, 10B donations not included in 10BD, other donation, government grant, domestic and foreign contribution, other receipts, income from main object, interest, income from business incidental, and corpus donation, which we are talking about earlier. Where the corpus donation, sir? Corpus donation. Under 5th, we'll have to corpus, it will not fall under total. Corpus donation, unless exempt under section 11(1)D, total income A1 to 5. That gross receipt, it will not fall under 15%. Okay, for that. Yeah, but only thing here we'll have to show under this thing we'll have to computation you show, but claim it under section 11(1)D. Only when you withdraw from the corpus only that other this thing will come. Less 15% accumulation set about under section 11(1)A, amount to be applied. An application of income, revenue expenses, medical relief, relief of the poor, education, application from accumulation, applied from 11(2) funds, applied from corpus donation, it has to be deducted. Disallowances, 40IA, 40A3, donation trust having same object, donation to trust not having same object, increase in payables, add allowances, 80% donation paid to other trade, replenishment of corpus have to be added. Then capital expenses, addition to figure less, applied from loan, add loan repaid. Total income applied to objects of the trust, shortfall, excess, whatever it is. Here only, area disallowance is a 40IA, 30%, 40A3. Here we are saying shortfall or excess arriving it as per this thing, but ITR only getting taxed. Thank you for the patient hearing for almost an hour, more than an hour we spoke. I'll be happy to answer, but I think most of the queries we are able to interact now and then. And whatever little I knew from my experience, I have shared it with you. Thank you very much. I'll be happy to learn with you after the session also. Thank you. I am also equally waiting to listen to CA SUTHESH. Thank you very much. Thank you for the opportunity.
Thank you, sir. And now next to move on to by CA SUTHESH, sir.
Good evening, everyone. Thank you so much for taking time amidst your busy schedule. I thank ICAI for having given this opportunity, chairperson of SIRC and all the office bearers. And I especially thank my senior partner CA John Ravindran Moses. He is one of the experts in this field, and he is a great motivation for me. So I thank him, and all my partners have motivated me. Even our staff and students, they worked for this session. So I thank each and every one of you once again for your time. I don't want to take much of your time. Sir has taken the entire thing in a very detailed manner. I know this is a little tough topic because we are very much confident about the business associates. So even after reading so many times these provisions, we always have doubts like corpus donation, accumulation. So I am also learning like you. So my presentation will be like, I will take you through rule number 17 AA for just 20 minutes, and I will take you through form number 10B for 40 minutes. So I will close my presentation in just 1 hour. Before that, I have shared the entire thing to the CPE convener team. They will circulate all these things. Some of the circulars, important circulars, I have kept it here. Like one of the members have asked regarding the relatives of the specified person. So they have issued a circular stating that last two are optional only. So relative and the substantial contribution. So there are 6 categories. First 4 categories is mandatory. Last 2 are, if applicable, you can give. So all these things are kept in this circular. I am not having much time to take you through all the circulars. That's why I have shared it here. And I thought I should share this corpus letter format. I think you can use it for your client. So the corpus donation, the direction should come only from the donor's side. It should not from the donee. So here I direct that this amount is intended towards corpus, and it has to be used only for the desired purpose, and the PAN number of the donor can be mentioned here. So this format, I think you can use it. Some of the forms I have kept it here. Form number 9A. Yes, sir. And I think our institute has published one technical guide regarding this audit report. That's a wonderful material. If you go through that, definitely you will master this kind of provisions. Yes, sir. I have shared in this material, sir. So this is form number 9A. Already Sir has explained. Supposing if at the end of the month, if you have received a big donation and if you are not able to apply it before 31st March, you can opt for this form number 9A, citing the reason why you are not able to apply it in the same financial year. And after form number 9A, you have to spend that same amount in the next financial year. Form number 10B, I will take you through in a detailed manner. This is the one I was referring to, technical guide on reports of audit under section 12A and 1023C. 1023C is a very big section. I think one of the lengthiest sections in the whole act, I guess, because it has a lot of provisos. So that one has been beautifully, explained in this technical guide. Then the entire IT Act, I have put it in a PDF form. This is the, originally I prepared a PPT, but I thought I should take you through the entire form class by class, so that it will be beneficial to each and every one of you. And I also can learn from the learned senior members. First, let us talk about rule number 16CC and rule number 17B. So this is the basic thing. for those organizations that comes under 1023C, we have to file form number 10B audit report if any of these conditions are fulfilled. So one is gross receipts exceeding 5 crore. The another one is even if they received even single rupee as a foreign contribution, I think we have to file form 10B. But I'm not sure whether if the supposing if trust has received 1 rupee or 10 rupees as a foreign contribution, but the entire gross receipts is less than 2.5 lakhs. I'm not sure whether form 10B is there or not. And if any of the activities or application outside India, then form 10B is applicable. For all other cases, 10BB is there. 10B is one of the lengthiest forms. So we will discuss form number 10B. So I have inserted my comments wherever is required. I think it will work for you when you open in your laptop or desktop. Here they start with two things. One is the financials are in agreement with the books of accounts. The next one is proper books of accounts are maintained at the registered office. So now the thing is rule number 17 WAA is a detailed instruction given by the department for the assessees to keep the books of accounts. So if we go through that, it's very tedious work for the assessee. But in spite of that, I think they have to do that. Then only we will be able to do the justice through this form 10B audit report. And we have to give an opinion saying that the annexures are all the details incorporated in the annexure to form 10B are true and correct, subject to the following observation and qualifications. So this form number, form number 10B annexure, that also to be entered by the assessee only. We have to just verify the correctness of the details, and if you are satisfied with that, we can give the report. Or if you are not having, if you are having any qualification, you have to inform here in these points. So supposing, say for example, the organization has to keep the books of accounts at the registered office. If they want to keep the books of accounts other than the registered office, then they have to pass a resolution for that, and they have to intimate the jurisdictional assessing officer within 7 days from the date of resolution. If the organization has not done that, then you can enter your observation here. And the last one is we have to give the opinion on the FS about the true and fair view. So whenever we talk about true and fair view, we have to follow the standards of standards on auditing in a full. So whatever is applicable to the NGOs, we have to follow. Like we have to get the MRL engagement letter to be done, and audit evidence to be there, documentation, using the work of other auditors, all these to be followed, and even confirmation, all these things to be done. So this is the one single page of audit report, whereas the annexure is bit long. So before we kickstart the annexure, let us go through the rule number 17A. I have prepared one Excel template for this rule 17AA. I have shared it here. You can use it, or you can even improvise it, and you can use it accordingly. So these are the list of accounts book or other documents to be maintained. The books of account related to the charitable activities. First is cash book, they have to maintain, ledger, journal, and copies of all the bills issued by the assessee, and all the receipts should be serially numbered. Fifth one is original bills issued to the person. So it's an expenditure to the organization. Receipts also to be maintained, and any other book that may be required to be maintained in order to give true and fair view. So point number A talks about books of accounts. Point number B talks about books of accounts with respect to business undertaking referred under section 11.4. If a business itself is given as a donation to trust, that business undertaking has to be, carefully follow the books of accounts. They have to keep it separately. Likewise, C, books of accounts as referred in class A. This is 11.4a. If the organization is doing some business which is required for the attainment of the objects, then they have to maintain the books of accounts. Other documents for maintaining records of all the projects and the institution run by the organization, name, address and objectives of the particular person who is in charge of the institution. Record of income of the person during the previous year in respect of this. Here they are mentioning current year only. Voluntary contribution containing details, name of the donor, address, PAN number if available and Aadhaar if available. So it is better to keep all these records so that when department asks for some clarification, it is readily available. So this voluntary contribution includes both corpus fund as well as non-corpus donation. And this one is income from the property held under trust, list of properties to be maintained, like income from business undertaking, properties, or income from business incidental to the attainment of objects of the NGOs. Regarding that, we have to keep the properties list. And if any income other than these two, for that also we have to keep the record. We have to, means the client has to keep the record. Third one, record of the following out of the income of the person during the previous year. So this talks about the application. So when we talk about the application, statement of application of income, it is like a cash flow statement, how we prepared for the corporates. So in addition to the income and expenditure, the balance sheet, we have to prepare, the client has to prepare the statement of application of income in the prescribed format. So if they keep this record properly, they will be able to prepare the statement of application as per the requirement. Now, application of income in India containing details of amount of application, name and address of the person to whom the credit or payment is made, and the object for which such application is made. See, the object they are talking about, is it for yoga, is it for medical, or is it for education? I think all the transactions should be captured by them in an Excel format or in some record. The second one is amount credited or paid to other fund which is registered under 12AB and containing same objects. So this we call it as inter-charity donation. For that also we have to keep the name, address, PAN number of the organization, the donee organization. And in application of income outside India containing details of application, name and address of the person to whom. So wherever applicable, like one of the members asked about the application outside India. I think still that approval is there, sir. CBDT approval is there. Okay. Okay. If the approval is there, and I think they can keep this transaction details. And here they are talking about form number 9A, deemed application, form number 10, accumulation, and how they are invested as per the modes specified in 11.5. If the investment is other than the mode 11.5, that also to be maintained. And this is the replica of the previous point. This is with respect to the previous year preceding the current previous year. Record of voluntary contribution made with the specific direction, that is corpus donation, that they shall form part of the corpus in respect of contribution received during the previous year, containing details of the name of the donor, PAN number, author if available, application out of the voluntary contribution. So from the corpus donation, how much they have applied, and details of those applications they have to maintain, and amount credited paid towards corpus out of such voluntary contribution to other organization. If there is any inter-charity with respect to corpus donation, that also to be maintained by them, but this will not be counted as application of income. And the specified mode, how they have kept in the investment, that list has to be kept. So these points are related to corpus donation, how they have received, how they have utilized the amount, and the record of contribution received for the purpose of renovation, repair, temple, mosque, gurudwara, church, as notified under section 80 G2 class B. I think this is most of our clients are not falling under this category. For that also we have to keep the record like contribution received, how they have spent, and the unspent money, how they have invested, all these things to be kept. And the seventh one is record of loans and borrowings. Here date of loan, amount of loan, date of repayment, where from we have got the loan, address, PAN number of the lender, everything to be kept in record. Here whatever the loan and borrowing, it should be less than 5 years only, and the application out of the borrowed fund, all these details to be maintained. And the eighth one is record of properties held by the assessee. The first one is immovable property and the second one is movable property. Whatever the properties they have in the name of the organization, they have to keep this list: nature of property, address of the property, cost of acquisition of the asset, registration document of the asset. Likewise, whenever they transfer the properties, that also to be maintained. And even movable properties, they have to have the detailed list. Here the record of, next one is record of specified persons. Specified persons details also to be maintained by the assessee, and any other documents containing for any other relevant information. Now they can keep in any form the record, either it is in digital form or printed form, and it should be kept in the registered office only. If they want to keep the record in some other places, like if they have multiple colleges in various places, they can keep the records then and there. And the only thing is they have to inform the JAO within 7 days from the date of resolution. And all these records to be kept for 10 years from the end of the relevant assessment year. Technically 11 years, current financial year plus next 10 years. So this is rule number 17AA. On the face of this, it looks very simple, but if, when we do the record in a practical thing, it's really a challenging one. So we have to educate the assessee to keep the record, because anyway we are certifying in form 10B that as per rule 17A, whatever the records are expected to be kept, they have kept. Like that we have given this, we are giving the reports. I think you all aware of the tax audit quality review board also. So these reports are reviewed by the tax audit quality review board. Now coming back to form number 10B, only important things I will take you through. These are the basic things, 1 to point number 5 basic, and the 6th is the related to the other places where the books of accounts are kept. We have to, the note number 3, if you go down, there are lots of notes. note number 3, it talks about the record if they kept in some other place other than the registered office. Type of the auditee, either it should be trust, society or section 8 company, and whether the auditee is established under the instrument. So we have to tick yes. Number 9, it talks about the registration. Here we have to give only the permanent registration. If the provisional registration has been converted into permanent registration, only the permanent registration details allowed to be entered here. If the assessee has not obtained the permanent registration still with the provisional, then we have to give the provisional details. Here management details we have to give. Sir? No. As of now, if the assessee is having only provisional, then provisional to be given. If they have gone for the permanent and the permanent certificate is received, then we have to give the permanent certificate alone, not the provisional here. Management details we have to give. Author, founder, settler, trustee, all these talks about a trust. And if it's a society, then we have to give the members of society and members of general council details. And if it is a section 8 company, directors and the shareholders who are having more than 5% of shareholding. So this is a very exhaustive one. I think the client has to, we have to make aware of all these things to the client. And if any of the person mentioned in 10A is not an individual, then ultimate beneficiary details to be given here. Point number 11, objects of the auditee. What is the object? Medical or education or yoga or religious, whatever as per the organization constitution paper we have to enter here. Point number 12, if the organization has underwent any changes in the deed, then they have to go for the fresh registration. All these details to be given here. Point number 13, this is applicable only for the provisional, for the organization, those who have got only provisional as of now. And here 14.1, we are giving a certificate that the organization has maintained the record as per 17A. And here we have to select, there are 18 row items are there. If we go to row, refer note number 8. Yeah. There are 18 items. We have to select all, whatever is applicable to the concerned assessee. We have to select and we have to inform whether they have maintained it or not. Whether maintained by the auditee, say we have to say yes or no, whether maintained in the computer system, whether maintained in register office. If not in register office, then these details to be given, and whether we have audited, we have to give yes or no. Advancement of general public utility, and when we see section 2 clause 15, there's a last limb that talks about GPU. The GPU related gross receipts and what is the profit of that GPU, those things have to be entered here. Business undertaking 11.4 and 4A. What is the name of the business? Business code. If the tax audit is applicable to that particular business, form 3CA, 3CB to be uploaded. This is business incidental to objects. similar to the previous one. TDS receipts. So if the organization has received some receipts with respect to 194C, 194J, 194H commission and 194Q, this talks about the purchase of material more than 50 lakhs. If any of the sections are invoked and we have to give the details of that particular business transaction, this is the department will check whether the organization's activity is genuine or not, or whether they are in the commercial or are in a charitable activities. To determine that one, they are given this TDS details. Whether the provisions of 1310, whenever there are three scenarios when 1310 is invoked. One is books of accounts are not maintained as per Rule 17AA. Another one is audit report not filed before due date, and ITR 7, the income tax return is not filed before the due date. If any of these three conditions is satisfied, then the computation has to be done as per section 1310. Like sir explained, only revenue item, revenue expenses alone will be allowed as expenses. All the capital expenses and other expenses will not be allowed as expenses. Form number, question number 21 talks about form number 10BD. 22 talks about the donations reported in 10BD furnished by the authority for the previous year, and donation not reported in form 10BD. These three are important. Cash donations exceeding 2,000, if they have received, we have to mention here. And if the donation is received from the religious to charitable trust, that has to be mentioned here. And any other donations we have to mention here. Point number 23, donations which could not be reported in form 10BD due to the non-availability of identification of the donor. Supposing there is a risk of anonymous definition, they can classify whatever the amount that we are putting here, it can be classified as anonymous donation. So it is always better to get the identity or the source of the donation from where we have received. Donation received in kind has to be mentioned here, and here the anonymous donation. There are 4 scenarios with respect to anonymous donation. One is, sir.
No, it is not automatically captured in anonymous. Whatever is entered here.
Yes, sir.
It is not automatically appearing in ITR.
We have to key in separately there.
It is not automatic.
Yes, sir. Yes, sir. Sir. So this one is not integrated with ITR 7. We have to key in separately. Here, if the donation, anonymous donation is less than 1 lakh or 5% of the total receipts, then it is exempted. It is not taxable. First one, this one. So supposing one of the organization has received 1.5 lakh out of total 20 lakhs, then this is 7.5% on the total amount. So here 50,000 will be disallowed or it is taxable. This is the first one. The second one is, if the anonymous donation is received by wholly religious purpose, then that is also non-taxable. And the another one is wholly religious, it's a mixed object. With respect to religious, they have received, then that is also non-taxable. The remaining thing will have to be entered here. Whatever you enter here in the D, that will be taxable. Here, total donation not reported in 10BD, they are bringing here, and total voluntary contribution received by the auditee during the financial year has to be mentioned here. These and all auto-populated. Whatever we are entering on the top, it will come automatically, this total. Total foreign contribution out of the total voluntary contribution has to be mentioned here. and voluntary contribution forming part of corpus. Now here they are deducting voluntary contribution required to be applied in 27. So this much to be applied by the organization. Here what are all the things they are deducting? Taxable anonymous donation is deducted because it is dealt separately, it is a taxable, and the corpus donation is also deducted because it is a balance sheet item. Income to be applied. Here whatever the fees from the educational institution and the interest income, all these to be entered here. Here the 29 is the total income, income applied outside India, which is eligible under section 11(1)(c). That has to be entered here. And the 30 income required to be applied in India by the organization. This is the final one. So whatever is the total coming, that has to be spent by the organization. Point number 31, application of income, excluding application not eligible and reported under section 30, under serial number 37. In 37, we will just discuss immediately. Supposing in a particular year, if the donation is lesser, whereas the expenses is more, then obviously we would have spent from the previous year accumulation. That you have to mention here in the serial number 37. Previous year accumulation, deemed application, previous year 15% accumulation, or if you have spent from the corpus, we have to mention here. Spent from the borrowed fund, we have to mention here. So basically this 37, whenever this will come into picture only when you spent more than what you have received. But supposing if you have spent only what you have received, then only 37 alone to be filled. Contribution, donation to any person. So this is inter-charity. The first thing is inter-charity. Whatever the inter-charity they have given to be entered here, and the remaining things towards the objects of the organization to be entered here. Here this is the total application. Details of application in excess of 50 lakhs during the previous year to any person. Supposing if particular they are into construction of building, and if the payment made to contractor more than 50 lakhs, then they have to enter the complete details, whether TDS is deducted or not, all these things to be entered here. Amount which was not actually paid, whatever the non-cash item to be eliminated from here. Amount actually paid during the previous year which accrued during any earlier previous year, that can be taken as application. And here entire amount out of the entire application, how much is for the revenue, how much is for capital to be mentioned here. This talks about disallowances, 40A, IA, non-TDS, non-deduction of TDS, we have to disallow. Cash transaction we have to disallow. Any donation given as corpus to other organization has to be disallowed, and any donation to organization which doesn't have the similar objective has to be disallowed. Apply to any other purpose beyond the objects of the auditee. If there is no enabling provision in the organization, if they have spent some amount, then that has to be disallowed. This is the total allowable application. And whenever you file form number 9A, those details to be entered here. When you are going for form number 10, that details to be entered here. When you accumulate your income less than the permissible accumulation, that has to be entered here. So up to this, all these are allowed as expenses or application. Now here income taxable under section 115BI. If the accumulated amount or the deemed application is not spent in the current financial year, that has to be allowed as, that has to be disallowed, and it is taxable. And if you have accumulated the amount but not spent for the purpose of the accumulation, or 5 years has been lapsed, or it is not kept in section 11.5 investment mode, then these to be disallowed. Whatever we have put in the anonymous donation on the top, that will come here. That is also taxable under section 115 BBC. Other income. Whether auditee has any income chargeable under section 12.2. This is for the benefit of the specified persons. If there is any benefit flows to the specified person, that has to be disallowed here, and it is also taxable. Here, if the corpus donation condition is not met, that also to be disallowed. Capital assets. Whenever the organization has sold any of the property, and if it is reinvested in a new asset, that will be taken as application. Here I have given one example. Yeah. Here the sale consideration is 10 lakh. Expenses related to transfer is 50,000. Your net consideration will be 9.5 lakhs. Cost of the asset, original asset transferred is 5 lakh. Then your capital gain is 4.5 lakh. It's a normal computation. Here there are two scenarios. If the cost of the new asset is equal to or more than the net consideration, then the entire capital gain will be treated as deemed application, and there is no tax on that. Supposing if the cost of the new asset is less than or equal to the net consideration, then the cost of the new asset minus cost of the original asset, that alone will be taken as deemed application. Here in this example, out of 4.5 lakhs, 3.5 lakhs will be taxable in the second scenario. Already we discussed this serial number 37, income application of income out of different sources. Here again, if any amount is spent from the different sources, and if that particular expense is more than 50 lakh, that has to be, the details has to be given here. So these are some of the violations. If section 2 class 15 last proviso with respect to GPO is violated, if the gross receipts is more than 20% of the total income, then whatever the income they are fetching from that business activity, it has to be taxed here. If the books of accounts are not audited or audit report is not filed before the due date, then again only revenue expense alone to be allowed as application. The other thing has to be added as income. The computation is listed here. And if the return of income is not filed before the due date, there again section 1310 will be invoked. So whenever the organization violates section 1310, then the normal statement of application won't work. They have to prepare a separate application in this format. Total expenditure incurred in India, they have to put here. Expenditure to be disallowed. What are the things to be disallowed? From the corpus fund, if they have spent, it has to be disallowed. From loans and borrowing, it has to be disallowed. Here, expenditure to be allowed is only the revenue expenses. The capital expenses to be disallowed. And any inter-charity given, that also to be disallowed. All these will be accumulated here and it will be taxed. Expenditure incurred for religious purpose. This is applicable only to the charitable organization, those who have ATG certificate. Here, they can spend up to 5% of the total income towards religious. not more than 5%. Here we have to determine whether they spent more than 5% or less than 5% in this serial number 40. Details of specified persons has to be mentioned here, and details of transaction referred to section 1310. These are the some of the transactions that will be considered as benefits going to the specified persons. These are to be disallowed and it has to be taxed. Specified violation, this is very important. There are 6 violations. If any of these violations are satisfied, then the department can cancel the registration of the organization. 12A and ADG can be cancelled. What are the violations? Other than the objects of the trust, if they have spent anything, then it is a violation. And if they don't do business, they do business which is not incidental to the main objects of the trust, then it is also violation. Supposing if they do business which is incidental to the objectives but not maintain the books of accounts, that is also violation. Any private religious purpose if they applied, that's also violation. Particular religious community caste, if any amount is spent, that is also violation. If the activities of the trust is not genuine, then it's a violation. The last one is very important, whether the auditee has not complied with the requirement of any other law like ESI, PF, RTE for the time being in force, and this under condition is there, the order, direction or decree by whatever name called, holding that such non-compliance has occurred and the organization has not gone for any dispute, then if that be the case, then that is also violation. Now the depreciation in addition to the asset acquisition, if they claim, that is also that's also disallowed. Section 269 SS STT, if the transaction is beyond the limit, we have to mention here, it will be disallowed. And the last one is, if the organization has deducted TDS for various expenses, all these things to be entered in this. There is a separate schedule for the serial number 49. Under this serial number 49, there are a lot of schedules which is applicable to, one is for corpus donation, foreign contribution, loans and borrowings. We have to give a detailed manner, and income applied outside the India, deemed application form number 9 year related details to be entered here, accumulation details to be entered here. Specified persons related transaction to be entered here. So this is not very easy to do the audit of a NGO anymore, sir. Previously, it's very, very tough. The challenge is assessee will not be able to understand all these things. They say that, sir, naangale charity pandrom, neenga ivlo panna sonningna, how can we do? So, but there is a risk for us only. So from the assessee also, we are facing risk. Department also, we are only facing risk. So if at all we have to give a audit report for any NGO, all these things to be followed. Correct. It's very tough, sir, actually. I'm literally scared how to do all these things, because our students also will not be able to grasp all these things. So with this, I finish my presentation. I hope I have done some justification. Thank you so much for your presence here. Thank you so much. Thank you.
Thank you so much, sir, for your session.
Thank you. If you want to add any value addition, you can give, sir. If you have come across any complicated issues, or if you have found any challenges in Form 10B, 10BB is much easier than this one. It's a cakewalk only. If that's also tough, but compared to this, that is easy. Sir, the statement of application, the preparation of statement of application is a very big challenge. We have to read lot, sir. So many provisos are there. Very tough. 1023C and 1112, all these are. The problem is if we commit any mistake, either assessee or us, the price is too high. So, thank you so much once again. Thank you. Thank you. Thank you.
Thank you members for your presence.